U.S. inflation cooled in February, something the White House credited President Donald Trump for. But it's not completely easing investor or consumer fears, as the data is not reflecting Trump's tariffs just yet. We connect with VOA correspondent Chris Casquejo. Welcome back, Chris.
Good to be with you.
Thanks for joining us. So, Chris, walk us through the latest inflation figure in the U.S. and also Trump's tariffs that are now in full swing.
Overall inflation for U.S. consumers was 3% in January. That was worse than the 2.9% inflation rate in December, which is what economists thought they would see again in January. The United States enacted 25% in new tariffs Wednesday on all steel and aluminum imports, ending previous exemptions that had been in place for several U.S. allies. This latest move affects imports from Argentina, Australia, Brazil, Britain, Canada, Japan, Mexico, South Korea, and the European Union. U.S. President Donald Trump says the tariffs are necessary to address the significantly increasing share of imports of steel articles and derivative steel articles from these sources, which threaten to impair U.S. national security. The EU responded Wednesday by announcing plans to impose tariffs on $28 billion of U.S. goods beginning in April. But Trump told reporters at the White House earlier today that he will respond. Canada also responded with $20 billion in retaliatory tariffs beginning Thursday.
Well, it looks like the 25% tariffs on all steel and aluminum imports are not just a concern for countries around the world. It is expected to take a toll on Americans and also could significantly raise prices for the Americans in the U.S. How is the general sentiment over there?
The Dow Jones Industrial Average stock market was down again today, but the S&P 500 and NASDAQ rose today. U.S. stock indexes had fallen for days, wiping out recent gains for investors. But trade issues are rippling through the economy, and even U.S. spirits producers are caught in the middle. The head of the Distilled Spirits Council said that the EU move to hike tariffs up to 50% is deeply disappointing and will severely undercut the successful efforts to rebuild U.S. spirits exports in EU countries. The EU is a major destination for U.S. whiskey, with exports surging 60% in the past 3 years after an earlier set of tariffs was suspended. But the leader of the powerful United Auto Workers Union agrees with Trump's decision to levy these tariffs. UAW President Shawn Fain said tariffs are an attempt to stop the bleeding from the hemorrhaging of jobs in America for the last 33 years. He's referring to the implementation of the North American Free Trade Agreement, or NAFTA, in 1992. Fain went on to say that tariffs aren't the end solution, but they are a huge factor in fixing the problem.
Well, Chris, as you know, there was a squabble between the U.S. and Canada yesterday with, Canada taking back its threat of a 25% electricity surcharge after Trump threatened to hike up the steel and aluminum tariffs to 50%. Now, what is Trump's strategy here?
Right. Let's start with what happened with Canada. Ottawa was spared an even higher set of tariffs after Trump backed down from a threat to push duties on Canadian steel and aluminum to 50%, double what he had promised. Then the leader of Canada's Ontario province, Doug Ford, who you see there, threatened to tax electricity sold to 1.5 million people in the United States. But U.S. and Canadian officials spoke Tuesday and agreed to reverse course. But as far as strategy, Trump and his advisors believe they will bring manufacturing jobs back to the U.S. through reciprocal tariffs and raising import tariffs. The administration wants to make it less attractive for companies to rely on cheap overseas labor and more attractive for those companies to invest in American workers and resources. Now, that shift would reduce the trade deficit and boost domestic economic growth, their thinking is. And they also want to move production of technology and prescription medicines to domestic sources to avoid some of the supply chain issues that came into play during the COVID-19 pandemic.
Well, on top of that, major banks are also reacting to Trump's comments earlier this week about possible recession risks. Now, how are they reacting to that comment?
Yes, the investment bank Goldman Sachs revised its growth forecast for this year down to 1.7% from 2.2% previously. It modestly increased its recession probability to 20%, because the White House has the option to pull back policy changes if downside risks begin to look more serious, it said. The chief investment officer and chief U.S. equity strategist at Morgan Stanley, another investment bank, predicted that the S&P 500 would drop to a low of about 5,500 within the first half of this year, down from its current level of about 5,700, before rallying to 6,500 by the end of the year. So mixed messages on what experts believe will happen with the economy this year.
Indeed. Last but not least, the Federal Reserve will hold its monetary policy meeting in the coming week. Now, should we expect a rate cut considering the recent situation and developments in the U.S.? What's the Fed's outlook on the U.S. economy?
Well, the U.S. Central Bank is expected to keep its benchmark overnight interest rate unchanged next Wednesday at its meeting. Financial markets expect the Fed to resume cutting rates again in June because of the softening economic outlook after pausing in January. The policy rate has been reduced by 1 percentage point since December when the Fed started its easing cycle. The central bank, of course, hiked the policy rate by 5.25 percentage points in 2022 and 2023 to deal with high inflation.
All right, Chris, thank you for connecting with us this morning. We appreciate it, as always.
Good to be with you.